Sometimes I get a question from my clients, why do I have to pay escrows if I'm a fiscally responsible person? And in this video, we're going to talk about why the lender prefers to collect escrows for you and pay taxes insurance on your behalf. Krista, let's talk about escrows and how does it work?
Okay, so this would be in section G of your closing disclosure, and it is going to show a monthly amount that you're paying for homeowners insurance and a monthly amount that you're paying for property taxes. So they divide those total bills based on the current bills available into the 12 months, and then they charge a cushion based on when you're actually closing to put that money in the escrow account to be available for your future bills as they come due.
Right. So normally, like from what I see on the closing disclosure, because we don't know exact amount of taxes that the county will require, so lender prefers, like Krista said, a little cushion to make sure that there is no escrow shortage and ensure that there is enough money to cover your taxes. And why lender prefers to pay that for you?
So it's actually kind of a liability for them to allow borrowers to pay them on their own, because it can threaten their investment. So if the taxes don't get paid for 3 consecutive years, let's say, then someone can come and buy the tax certificates for those and then potentially apply for a tax deed to take the property away from the owner if the taxes are unpaid. So the other side of that is the insurance side, and for insurance, if it's not if there's not a policy in place, and say something happens to the property, there's some kind of natural disaster, or there's a fire or something like that, and there's no insurance in place, then the lender won't get paid because there's not a claim that can be done.
Right. That's a great explanation. So if there's a fire, you're at loss, lender is at loss. So everybody's at loss. And the lender wants to make sure that all these payments go smoothly and on time to prevent any of these complications. One thing that I think we need to touch on is that the amount of months that they require in escrows depends on what months in the year you're closing. Because the closer you are to November, which is when the tax payment comes due, right? Because November is due already, November 1st.
November 1st.
So the closer we are to November, the more money lender will want to see in the escrow.
Right.
From what I've seen, the highest amount is actually charged in August.
Yes. And then, like I touched on before, in September, October, they'll usually require that we pay it. So there'll only be a few months then, and then we would collect the full amount typically from you as the buyer. So even though it might not go into your escrow account, it would come to us. We would hold it until the bill comes out, and then we would pay it directly to the tax collector and refund whatever's left over.
And the insurance, normally I see like 3 to 6 months payment in the escrow. I think it's important that we say that this money is not lost in the universe. This is your money. It stays in the escrow account, and then it's paid on your behalf. So you can, in an ideal world, you could have probably paid it by yourself, but in this case, lender prefers to pay it for you. So regardless, it will come out of your pocket in the same direction.
Exactly.
Some lenders, they do allow to waive the escrows, and they give you the chance to make this payment on your own. Then you need to make sure that these payments are done on time, your insurance policy is not interrupted, and your taxes are, the county receives your taxes sometime in November, because that's when you get the discount that's the biggest. For that service, if they waive your escrows, normally I see that they charge a fee or the addition to the interest rate, because the lender likes to compensate on the risk.
I didn't
Not
know that.
everybody does it,
That's
but
good to
I've
know.
seen a few.
Very good to know.